I planned to make a killing buying Bitcoin meme coins called Ruins when they came out this summer, but instead of seeing eye-watering gains, I'm mostly just holding underwater bags. So what went wrong? I want to know, why aren't meme coins on Bitcoin, the largest chain in the world, exploding? Well, my guest today, Hex from the Saturn trading platform, thinks the answer is clear. It functions like a person-to-person market rather than a real exchange. But Saturn is here to fix that, without the risk of handing over your keys to a third party. And in this interview, Hex explains the reasons Bitcoin's trader UX is so broken, why Saturn's release of an automated market maker, or AMM, and liquidity tools will revolutionize on-chain trading markets, and the reason Bitcoin builders are chasing the $1.3 trillion liquidity opportunity. And if Saturn is successful, Bitcoin assets like Ruins might still be a massive underpriced opportunity. Now, this conversation covers some topics in more detail than the average investor might care to know, but I'm glad we did, because it details maybe once again excited about the potential for Bitcoin assets. Enjoy, and let us know in the comments if you agree. Hex is the director of Saturn, a decentralized exchange for Bitcoin. This innovation brings advanced trading functionalities such as atomic swaps and liquidity provision directly to the Bitcoin base layer, while maintaining its core principles of decentralization and security. And I think it could be a massive innovation for the Bitcoin ecosystem. Hex, very excited to have you here. I want to kick it off directly with a question about your vision for this. So if you were going to describe to your grandma or your grandfather or a no-coiner friend, what exactly is Saturn today and what you expect it to be in 5 to 6 years? Paint that picture. What would that sound like?
That's a tough question. I think the easiest way of understanding what Saturn is trying to do, and in a way what kind of Arch is also trying to do, is emulate what we've seen in terms of programmability on other blockchains, but on Bitcoin. I think it's especially interesting, being that you go back to some of the earliest discussions about Bitcoin and some of the early Bitcoin forums. Programmability was always intended to come to Bitcoin, but it was never wanted to risk Bitcoin's positioning as non-sovereign money. That was always incredibly important. And that's why we moved to innovating programmability to other chains like Ethereum, like Solana. And we've seen good innovations there, good innovations like borrow-lend, stable coins. These things have a lot of value. Now, at the moment, if you want to interact with any programmability in terms of crypto, you can't do that on Bitcoin. For example, if you want to de-risk your Bitcoin, at the moment, the only way that you can really do that is send it to a centralized exchange or bridge it to another chain entirely. And people that are really passionate about Bitcoin want to remain on Bitcoin. So what Arch in Saturn, which is an application that benefits from something like Arch, allows for is it brings applications that benefit from programmability to Bitcoin's base layer. And in such an interesting way, so much that people that aren't necessarily being makers in these transactions, but are simply just interacting with like a swap, for example, don't have to take on any trust assumptions. So it's very Bitcoin aligned. And I think it presents a really interesting dawn for Bitcoin where, hey, what does programmability really look like? And yeah, Saturn, I think, provides programmability at its most foundational level, being a token exchange. Now, I understand my grandma's not going to understand that, but I think it's difficult unless you have the whole picture of blockchains.
So maybe to summarize it, it's looking at the programmable innovations that you see on other chains that have different trust assumptions to Bitcoin. It's bringing it back onto Bitcoin, but retaining the self-sovereign, non-custodial elements of Bitcoin, along with the other sort of features or principles of Bitcoin. Is that fair summary?
Yeah.
Okay.
Yeah.
So that is the vision for what you want to achieve. It's really taking the best of what you've seen on some of these other programmable chains, bringing it back to Bitcoin without having to sacrifice the security that's in many ways brought many people to Bitcoin in the first place.
Is it?
Okay.
Yeah, exactly.
So, which is interesting, and I know we have an interview with Matt from Arch coming out very, very soon, so excited to be publishing that. To talk to me a little bit about, I mean, that's kind of what brought you over here, that's the vision for what you want to achieve. What does that look like if you're successful? What do you think it is to Saturn, let's say in terms of volume, the assets it's running, and maybe just to the Bitcoin network broadly? How do you see yourself playing into the success, assuming that is success 5 to 6 years down the road?
Yeah, I think success means different things to different people. I think tangibly, if you were to look at the window of opportunity that we have right now, it's that Bitcoin has the infamous, I believe, as of today, it's like $1.3 trillion market cap. Now, a lot of that Bitcoin is sat idly in wallets, not kind of benefiting from this programmability. And again, going back to this point, if you want to de-risk your position from Bitcoin, you actually need to leave Bitcoin, which is obviously not ideal. Now, that is just a huge amount of capital that is sat idly in Bitcoin right now. And I think just as simple as providing a stable coin swap on Bitcoin with something that is relatively secure, like a Tether or a Circle, you see hundreds of millions of dollars worth of swap volumes there. So I think that's kind of today's opportunity. But in terms of what success looks like, I think, again, if we can keep a lot of the innovation that we've seen be valuable in other chains, whether it be stable coins or whether it be borrow lend, things that don't necessarily depend on things like high throughput or super fast blockchain speeds, we can bring that to Bitcoin and have Bitcoin maximalists that want to see a sustainable Bitcoin ecosystem. Again, I'm sure we'll get into this later on, but one of the less sexy issues that Bitcoin has right now is that miners are running out of incentive every 4 years. And unless we have true Bitcoin ecosystem activity with useful programs such as DeFi applications, it puts Bitcoin in a really difficult position. So in terms of success, like it would be, can we bring usable applications to Bitcoin that actually results in sustainable mining?
How does that problem play into your specific interest into Bitcoin? I mean, is that have you always been a Bitcoiner? Have you played around with other chains? Because I think a lot of people that are developers, builders, are often attracted to solving really big problems, or they can be more ideologically aligned to something. So how does that play into your interest in Bitcoin and trying to come here and solve this?
It's a great question. I have a deep interest in a lot of different verticals here, but I also have very conscious awareness of our limitations. So what I know that I can do is we can contribute to this really specific problem. I think blockchain at its most foundational level is a freedom technology, and that is something that I'm incredibly passionate about. I also think this whole industry, for better or worse, anchors on the success of Bitcoin. I believe that having usable applications on the base level of Bitcoin is paramount to Bitcoin's long-term success. Therefore, kind of like that's kind of my interest. I know I can contribute to helping this very specific problem that solves a problem that's much larger than myself, if that makes sense.
Yeah, I know. I think that does make sense. And it's actually interesting. Maybe I'll bring forward a little bit of the discussion with Matt. Hearing him, he had a background. He said, he dabbled with a lot of the other tokens, had a good time doing that. But Bitcoin was his first foray into the cryptocurrency space. And with Taproot came out, which opened the door, and then Ordinal Theory opened the door to really open up the design space for what he could do. It brought back the interest of being able to solve some of these problems. But freedom and sovereign kind of view seem to be a pretty strong hold, a pretty strong attraction point. And then, add on the fact that the space is innovative, or at least it's progressed to where now you guys are able to actually start to build things of meaning and value.
Yeah, it's definitely surreal. But yeah, trying to not get too caught up in that and just trying to stay grounded and just solve one problem at a time and see how we go. But yeah, it does feel pretty awesome to be solving some of the largest problems that Bitcoin has. It's very so I'm very proud to be doing that.
So coming back to the question about sort of this future vision, so it's you just stated it's about bringing a lot of those innovations that you saw on those other chains, bringing them back to Bitcoin, maybe with some taking some off the table that really require high throughput. We can kind of get to that in a moment. What's your perspective on sort of on what Saturn looks like? Because I know that there's many projects that are trying to build on Bitcoin right now. You have multiple versions of L2. The Arch network is attempting to be a little bit different in terms of how it integrates directly with the UTXO accounting model. So from your perspective, how impactful is that for your success? Do you expect to see other DEXs coming out on Bitcoin? Do you really see what Saturn is doing as being so unique that it's going to really take over, the majority of the volume? How does that play out in your mind?
So I think the best way to, so we've always had a massive focus in Saturn of being user experience focused. Now, I'm not entirely sure what's the best way to even address this topic, but let's look at the user experience that you currently have right now, and like the on-chain experience for trading Rune tokens. If you're going to do it with the most popular means, you are presented with a user interface that, if you've come from Ethereum to Solana, you've never seen before. There's nowhere that you can type in tokens. You're presented with weird specific quantities of Bitcoin tokens that you have to buy. If you're to look at the cheapest price for a Rune token, it's relatively complicated. More often than not, the user's going to think it's the first listed one, which could be sold for thousands of dollars. And it's just a really janky user experience. Now, going back to what we wanted to do with Saturn originally is like, let's provide this user experience that we know that users love. We're talking simple swaps, limit orders, partially filled orders, open orders. And a lot of that we take for granted on chains that have smart contract functionality. To do that with Bitcoin is very difficult, mostly because of miners. Miners cause a lot of headaches, being that they can reverse engineer transactions, they can front run transactions. That's a big reason why you don't have these more like rudimentary applications built with just Bitcoin's architecture. If everyone was going to be a really good boy and behave, we could have some interesting applications, but that just definitely won't happen. So that's why we have really weird looking apps. We solved this on Saturn over the last year by using trading wallets, which is essentially you deposit into a trading wallet, you can interact with other trading wallets within our site, and then once you're done trading, you can withdraw. And as a result, you have this frictionless user experience where you can do partial filled orders, you can do open orders. It's not peer-to-peer. I think our largest transaction involved 400 different wallets. And you get all these really interesting functionalities. But the biggest issue with this is that deposit withdrawal flow is almost representative of like a layer 2 experience where you're depositing or you're bridging into another layer, you're trading around and you're withdrawing, you're settling back on the base layer, whatever. And as we know from layer 2s, this is kind of flawed. It's never really going to see user adoption. It's such a significant point of friction that also what happens is you end up with siloed liquidity. So the only liquidity that you're going to have within this closed environment are the wallets that actually took this leap to deposit into this trading wallet. Now, this is all because Bitcoin was made over 16, 17 years ago. It wasn't designed for any of this. So if we could just have smart contract execution on Bitcoin, things look very, very different. And that's what Arch poses. And Arch is super interesting for us. And obviously, there's a number of different teams that have tried approaching this in a number of different ways. But I mean, after we saw that Multicoin, their last example, Multicoin are a fund that we respect tremendously. If we think they're some of the brightest in the room. We did really want to pay attention to that. And I think what Arch presents from a user experience perspective is so flawless. And it goes so back to this like original goal of Saturn, which to provide this flawless user experience. So just to paint the picture of what using Saturn is going to be like post Arch mainnet, forget trading wallets. You can just come onto Saturn with your experts. Let's say you want to interact with a simple swap. You don't need to know about what UTXOs are. You don't need to know what PSBTs are. You say, hey, I want to buy $100 of dog go to the moon token, and you're just going to buy $100 of dog go to the moon token. And that's going to come straight into your wallet. You don't need to settle that or anything. And that removes 99.9% of complication. Now, going to one of your points there about, hey, do we see us retaining market share? Well, I think one interesting thing here is like that's going to provide the easiest, most frictionless solution. I think that's highly interoperable. I think that any wallet providers that may be listening to there, our SDK is incredibly simple. That you can just plug straight into our swaps, and you can have native Rune swaps within any terminal. But beyond that, this is going to be the first time that people will be able to earn fees on Runes. Now that's really interesting because it provides a very different asset to what Runes are now. And I think as well, if you look at things like Proto Runes and BRC 22.0, I think these assets are going to get really even further, or definitely increase the scope of possibilities here, specifically with dynamic supplies, which has been the biggest headache for a lot of stablecoin providers. But LPs is going to be super interesting because if we can agree that, hey, this simple swap experience where the user doesn't need to know or have any education of using Bitcoin to experience that they're really familiar with, that's going to see volume. Well, where does that volume come from? The volume comes from pools. And now anyone can provide liquidity in whatever pair they want. So let's say you want to do dog token and a Bitcoin pool. You're now going to be making trading fees out of everyone in that swap. If people are using that swap, the amount of liquidity provided in that pool is going to determine how much you're earning. If nobody else is providing liquidity, this provides a huge revenue generating opportunity for people that are willing to make those pools. And that's when we see these free markets develop. We will see liquidity pools start to thicking out. And then obviously liquidity is going to follow volume, or volume is going to follow liquidity. So that's kind of our thesis, is provide this gold standard of a user experience for takers don't need to take on any trust assumptions. And for more profit-minded individuals, they have this huge opportunity where if they want to come into an Arch network-enabled LP, they're free to do so. And if they're the only ones that do so, they're going to be earning a hell of a lot more than when these LPs are filled out a few months down the line. So it's a really interesting kind of game theory there.
Yeah. So much to unpack from what you just shared, because I think you
Sorry.
no, it's fantastic. I think something I want to kind of highlight here, because I didn't quite get that when we're talking about the vision. It's really the seamless experience in 5 to 6 years where people look at Bitcoin the same way they maybe look at other tokens, and perhaps even going outside of the crypto sphere, where the experience is as seamless as it could be anywhere. Whereas versus today, that's really part of your vision as well, is that seamless UX. Maybe Bitcoin is sort of leading the pack at that point.
Yes, so I'm a bit naive in my assumption that I do think that every problem is solvable in Bitcoin, no matter how much engineers tell me I'm an idiot. But I do think we will find ways of getting there. There's so many abstract solutions around each and every corner that just make everything seem 10x more possible. But again, I don't think that's something that we shouldn't get our heads too lost in the clouds there. I think we should solve one problem after another. I think what is a fact is that we'll be able to provide a user experience which is not too dissimilar from using ETH. So you're going to have like a 5-6 minute transaction, and yes, that transaction is going to cost you $3-4 or whatever. But the Bitcoiners who do not want to use ETH, there's going to be significant demand there, and that's the user experience that we definitely can emulate. So let's get that one over the line first, and let's see what problems we can solve after. I know that there's a bunch of really interesting stuff when it comes to like state-only execution, for example, in Arch, which can bring up throughput and obviously making things a little bit cheaper as well. But I just think we're a bit too far away from that to really have constructive conversations.
Fair enough. Yeah. So a bold vision, we can solve these things, but we got to get over the first hurdle, which is right in front of us, right? To be able to get past that. So I want to get your take on specifically coming back to Arch. Right. As I mentioned, we did an interview, really enjoyed talking to Matt about it, reading through their white paper, which is fantastic. It really gives a breakdown for this novel way which they are going about being able to integrate directly with the Bitcoin network natively, right, with its accounting method, which is really, we talked about it kind of going back to this idea of it really being a cash peer-to-peer system, which I believe is part of the actual Bitcoin original white paper. When you mentioned just a moment ago that you were excited when you heard about Arch and you heard about it, maybe I think you said multi-coin capital. What was your take as you were reading through their approach? And I imagine you've read through many other approaches, right? Having been in the space, did a light bulb kind of go off in your head saying, "Oh my gosh, they finally solved it"? Did you get in touch with them? How did that actually work out?
So we messaged them straight away. I think the premise of this might take a little bit of a tangent here, but the premise of doing anything on Bitcoin, I think, is really exciting. And there's two different camps of people that come to the space. There's people that kind of want to just seize the opportunity, and there's people that genuinely want to innovate. Like you mentioned, I think like we're on our maybe 2,000 layer 2 on Bitcoin right now, and X amount of billions has been poured into the same Polygon multi-sig kind of scheme about bringing programmability to Bitcoin. So there's a huge amount of skepticism here. Obviously, venture-backed team. We've been in the space for a year. We've built up some brand equity. We have a user base, and it's like, is this going to be a dependency? Can we really trust this team and things like that? So the first thing we did is we just messaged the guys, and like, I think the light bulb really hit. Like after we spoke to Matt and Amin and hearing how much they cared and how open they were to problem solving and working through problems together, that was really inspiring. I think like this is one of the things that is a little bit upsetting about the venture capital that falls into these layer 2s, because I think people really underestimate how many different moving pieces that you don't control, all of them have to go right for this to even have a chance of succeeding. And Arch Network isn't, oh, hey, this is just the Arch Network team. It's the Arch Network ecosystem. It's teams like Hermetica, who just announced their fundraise today. It's projects like Maestro, it's Saturn, it's whoever's going to come in and build Borrowland, it's whoever's going to come in and build Pump.Fun. Like, can you work as an ecosystem? And unlike any other team that we spoke to that's even thinking about these sort of problems, Arch, head and shoulders, have been the most open to kind of cross collaboration and solving problems together. Like I think they'll admit it as well, or they'll say like they're not the only people that's had a similar idea to this. So an idea is one thing, being able to execute on it is a whole other kettle of fish. And that's kind of that was a light bulb moment for us, like after speaking a week or two with them.
Just the ability to collaborate. Well, have any of the demands or requirements that you've had, have they fed into some of what Arch has had to consider? Have they evolved some of their design and their working based on some of your feedback?
Oh yeah.
Really?
Oh yeah. I mean, hey, like these are really complicated problems, and working with Bitcoin is really, really difficult. And yeah, I mean, you're going to get hit in the face with something that you didn't expect, and that did happen a number of times. But Amin is a genius, and Marcos, our lead developer as well. I think he's one of the best developers in the Bitcoin space, incredibly underappreciated. And yeah, they just mind meld and got through those problems one after another. And I think that's like my key phrase for Bitcoin is abstract solutions. Like you really need to think outside of the box. And yeah, I think like they've done so. Yeah, there's definitely been moments of like, okay, actually shit, this isn't going to work. Maybe we need to rethink, re-strategize and approach this in a different way.
I know I kind of dove directly into Saturn. I was asking specifically about the vision for this. I didn't really get your background. And you can share as much or as little as you want, but what is your development background? Have you worked with some of the other ecosystems? And in those ecosystems, how does the experience you just compared working with Arch compare to those?
So yeah, I've been in this space for a little while. I was doing a PhD in decentralized academic peer review. So just this whole idea that instead of one centralized governing body can say whether data is right or wrong, which is obviously very corruption sensitive.
Corruption sensitive. You got to trademark that term.
I was proposing like a different way that we could do this with like anonymous peer review with like audited individual. Anyway, and that allowed me to network with some interesting people in the space. Got to know Andrew Thurman, who was the advisor for Chainlink at the time. He introduced me to Cointelegraph. I wrote for Cointelegraph for about 7 or 8 months, covering some like different things. I covered some of the novel legal issues in the early Solana ecosystem. There was an issue with the Degen 8 Academy NFT mint where 2 people had the same NFT token, the same image, and there's a question about who legally owns the rights to this image now. So, but yeah, it was networked with a ton of really interesting people there. Built the Fracture on Solana with some of my childhood best friends. That's been awesome. Made Omni Creative Studio as well, which is one of a number of different products and clients with marketing, go-to-market, fundraising, product development. But yeah, once I saw what was happening with RareSats and Bitcoin a year ago, I've just kind of been laser focused ever since on like, oh my God, the token economy of Bitcoin is by far the biggest opportunity that I can see in the space. And I would love to dedicate everything I have to that.
Well, it sounds like you're attracted to hard problems. So from decentralized peer review to solving this one on Bitcoin. So that's great. That's an interesting background to bring you back to Bitcoin. Like you said, the opportunity. Let's use that as an opportunity to discuss a little bit about the challenges, because you've spoken about them already a little bit, but you have the paper that you shared with me offline, and you really do a nice job of articulating several of the challenges that you're looking at dealing with Saturn. Some of the things like limited liquidity, selling ruins in bulk, and so it's all about ruins. Maybe start off talking a little bit about some of those challenges that you guys talk about in those papers or in the paper. And then maybe just express why that's, continue to be such a big problem for the ecosystem.
So yeah, I mean, the big problems that we have at the minute. So obviously the user experience for most platforms. So you've either got to take what I mentioned earlier, which is this peer-to-peer UTXO based marketplace, which is almost akin to an NFT marketplace. But essentially you list specific UTXOs which contain random amounts of a token, and then you buy that. So then it's not really a fungible marketplace, it's more semi-fungible. And then you've got extremely limited functionality there where you can't do open orders, you can't partially fill an order, anything like that. But it is kind of Bitcoin aligned. And then you've got the other approach that products have taken where it's you take this full custodial route, which is where you're literally handing over your assets to a third-party custodian to provide this frictionless experience. So you can have things like LPs, AMMs, and the likes of such. And then you've got the route that obviously we took previously, which was the base layer multi-sig approach. But again, there's high points of friction, as I mentioned earlier. And again, Arch can circumvent that with that smart contract functionality. So that was kind of the biggest limitation that I think Bitcoin faced, and it's such a clear to the jugular solve there. Outside of that, I think things get a little bit more interesting with things like front running and sandwich attacks as well. These are things that are possible now with Saturn. I think that one I feel quite strange about, because I know there's been products that have raised several $1 million that build products primarily benefiting from the MEV vulnerabilities that trading on Bitcoin has. But now with this new Saturn solution, those products aren't valid anymore. Like, you wouldn't be able to do that on Saturn. So it depends how much liquidity remains on the original marketplaces. Those kind of products will be able to benefit from MEV opportunities there. But within Saturn specifically, you won't be able to employ things like mempool sniping or kind of like dark pool sandwich attacks.
Yeah, so maybe for the audience that has heard some of these terms but doesn't quite understand them, could you give them just a high-level overview of what exactly this is, this whole space, what we call MEV?
Yeah.
They can really understand what it is and why you felt it was important to solve.
So anyone that's tried buying a Rune token or even a hot ordinal has probably experienced this, where it's like you push the transaction, it's pending, and then you don't get it. So what happens there is that miners don't need to adhere to the transaction order that comes through. So let's say me and you both put to buy an ordinal maxi business that we thought was way undervalued, and I put my sats per VB at 20 or whatever, so I've got a pending transaction. If you want to come in and put a slightly higher transaction fee, you can take that order from me, because the miner is going to prioritize your order over mine, if you're paying higher gas, essentially. And obviously that presents large arbitrage opportunities. So if we're to deal in like large size, I want to pick up a super cheap chunk of Rune tokens. As a miner, I could front run that transaction and I can essentially sell that back to you. And if you do that on a long enough time frame, once we start to automate these tools and things like that, that just provides a huge vulnerability. And the only people that are going to really suffer there are just users, because users are just going to end up overpaying for orders because of all these vulnerabilities. The other side of things is dark pool sandwich attacks. So essentially, this is where, specifically with custody pools, you're essentially trusting that their pricing is correctly. And if they wanted to, they can essentially reflect pricing whichever way allows them to profit the most out of certain trades. So the ways that we solve this is, one, with sandwich attacks, all our pools are completely transparent, so they're completely verifiable. So that's impossible for us to do. In terms of MEV, all of our transactions are linked. I won't get into too much of the technicals of that. Hopefully when this podcast is out, our technical white paper is out as well, and you're more than happy to dive into the nitty gritty there. And if there's any questions, whatever, you can always message our dev. But essentially what that means is it's now uneconomically viable to front run any transaction on Saturn. Another interesting caveat here as well, and this again is more for developers that have kind of really tried to experiment a bit, but there's different signature types that you can do. So we employ a cash all, so none of the aspects of your transaction can be altered. Now, there are different signatures, and some signatures, specifically ones that would be really useful for, I remember I spoke earlier about having an open order. So an open order being, I just want to bid, the dog is going to dump 20% from here, and I want to place an order at that price. Theoretically, I could sign a transaction that says, hey, look, marketplace or product, here's my PSBT, here's my $100. I'm going to trust you to do what you want with that to fill that order. The difficulty comes from those transactions can be reverse engineered, and you don't necessarily have to give that user the UTXO that they want in return. So you can just have complete loss of funds in that regard. So that's another thing that also now is impossible with the Zcash all transaction. So I'm sure there's going to be other MEV opportunists out there. But in terms of these just glaring vulnerabilities, I think the vulnerabilities that are most commonly experienced by people trading on Bitcoin at the moment, those will be obsolete with the new Saturn.
So with that, I guess hearing what you're saying, it's really MEV for the layman. It's a front running attack that makes it more expensive to actually get a hold of the assets that you're trying to provide, be it a Rune or some other Bitcoin native asset. Your design attempts to take off the table some of the more glaring exploit opportunities for these minor attacks.
Correct. Yeah.
Okay. And do you see MEV as a nuisance for the space that's limiting it to grow, or do you see it as an actual inhibitor of growth? Because, as you were talking about sort of this idea of like larger pools of capital willing to come in and let's say, get a larger position size on any one asset, seems like the MEV could actually be a pretty significant barrier for that.
Huge, yeah. Yeah, so it goes back to the just step-by-step problem solving. So obviously we deal with a number of institutions at the moment that are looking like market making on Bitcoin at the moment, and it's not feasible right now with the limitations that we have. Beyond that, there's still kinks to work out, but yeah, just sort of minor front running as is just, it's a non-starter. There's not even a conversation to really be had there. So I think like this is the first step at kind of people taking this more seriously. Market making with the MEV opportunities or vulnerabilities that we have right now is kind of just not viable. I think this is really interesting. So people often use PUPs. The PUPs rune token is being bridged to Solana. So you can either trade the PUPs token on Sol or you can trade on Bitcoin. And people often post out like, hey, PUPs has done X $1 million worth of volume, which is more than all of Bitcoin tokens volume can buy. It's like, well, why do you think that is? Like bots, market makers, all of that can't trade this on Bitcoin due to all of these opportunist like attacks that can happen to your orders. So Solana obviously has a lot of resistance in place already. Bitcoin has none. And that's basically these huge disparities in volume. We start to solve some of these vulnerabilities. We start to invite some of that volume back onto Bitcoin. And then, liquidity begets volume begets liquidity, and so on and so forth.
Yeah, bringing the volume and liquidity back to Bitcoin. It's a good slogan. Okay, so MEV, and really that man in the middle, I know it's not a man in the middle attack. That actually refers to a different kind of attack, but it's a front-running attack that you're looking to take off the table. You're also looking to solve these liquidity problems that you talked about from a user experience point of view for Ruins specifically. But I think what you're really saying is you're scaling it up from being a peer-to-peer type liquidity arrangement to more of a true marketplace type of arrangement. Is that correct?
Yeah, so kind of. I mean, there's two aspects here. So again, I think the easiest way to picture trying to sell Rune tokens on Bitcoin at the moment is like an NFT marketplace. It's like, hey, I'm going to sell my UTXO. Does anyone want to buy my UTXO type thing? Which is very different to trading tokens on ETH or Solana, where you have LPs and you have AMMs. An AMM essentially just means that there's always going to be someone on the other side of your trade instantly that will buy or sell. So it's a good way to phrase this. So at the moment, if you want to sell your dog token on, let's say, Magic Eden, someone needs to come across and buy that. There's no AMM that's going to buy your order. Whereas with an LP, if you provide Bitcoin and dog, the Rune token, you provide two pools of capital that people can trade into. So whenever people want to trade now dog, there's always a quantity of dog that people can trade in and out of, or there's always a quantity of Bitcoin that people can sell into. Now, obviously, fees are generated as a result of that. If you've provided your tokens to provide liquidity, you're now going to earn fees on it as well. So if you want to speculate that this is going to be a sideways, choppy market, providing liquidity is probably going to be the most profitable endeavors that you can do. So I think, it solves a huge amount of liquidity, a huge liquidity issue that we have, being that there isn't really any liquidity provision. There's only just these orders that you can take. But then also on the other side of this, you have the AMMs. You've got much more frictionless, instantaneous trading that you can participate in.
Okay, so we've got the front running. You've got this liquidity, like you talked about, just with the AMM, changing the way liquidity is going to be provisioned, changing the opportunity to actually earn fees off the liquidity you're willing to provide to the marketplace. I know you've also talked about actually adding advanced trading capabilities like open limit orders. So it sounds like those are the real challenges that you're looking to address with Saturn, at least in the near term.
Yeah, so there's a whole roadmap of fun experiments that I can't wait to share with people. But literally, let's just get those foundational bits of token trading. Let's give people liquidity pools. Let's give people AMMs, and then I think we can really start to have some fun. But we've got a bit of a point to prove in a minute with programmability on Bitcoin. I think people are skeptical, and rightly so. I think they've seen what's happened with infinite layer twos, infinite promises, infinite failed experiments, lots of lost money. So I think let's let the product speak for itself, and then let's start to really push the boat out in terms of where we can take this, because we can take it a long way.
Do you see this as being even then a bigger opportunity because of the amount of skepticism and your confidence in what you're delivering?
It's a good question. It definitely makes it more enjoyable from a building point of view. I just love the feeling of people saying this won't work or this is a bad idea, and you've seen the product work. You're like, well, we know it works. Like we can see it. That's always quite fun, and obviously seeing how people backpedal certain theories on how you thought things are going to develop is also quite fun. Whether it presents an opportunity, it's hard to say because we're not really speculating. It's not really like we're buying the lows of this asymmetric opportunity. We just want to see user adoption linearly. If people were open to new technologies and were open to hearing about what you're trying to do, I think that would make adoption much more simple. But again, I think people have employed a healthy amount of skepticism as a result of some of like the opportunist behavior we saw when ordinals first came out.
No, that's well, it is interesting to me, I guess, when I hear about what you're trying to unlock going into the native accounting of Bitcoin. You put out some of those terms like UTXO and I think PBTX.
PSBT, partially signed transactions.
PSBT. That was actually something I read many years ago. Andreas Anatopoulos, Intro to Bitcoin programming. I'm not a programmer at all, but it gave me like this surface level understanding. And then I read what you're putting in. I'm like, okay, there's more stuff that I don't understand, especially around the accounting model. Maybe just for the audience, just real quickly, can you just break down those two terms so that they're aware?
Wow. Okay, this is fun. So
simple for grandma.
So yeah, it's fun. I've tried rehearsing this a few times, so it has been a while since that. So a UTXO. So a UTXO is helpful to think of a UTXO like a $10 note, a $10 bill. Now, let's say you want to go and you want to buy a can of Coca-Cola. You have to give someone your $10 bill. So remember, this $10 bill represents the UTXO. So place a can of Coke with an NFT. You want to buy an NFT, you need to give someone your whole UTXO. So that is very problematic for application because all of this user's funds have been just transferred somewhere else. Once the transaction is settled, so let's say the can of Coke was $5 and you had a $10 note, you might get that $5 back in one note. You might get that $5 back in two notes, in two coins, whatever. The similar thing happens with UTXOs. Let's say I give you a $10 UTXO for a $5 asset. I might get back 3 UTXOs containing different amounts of tokens. Now, I don't know why Bitcoin is made this way. That is just the way that it's made. It makes things incredibly difficult. I know Cardano in obviously Dogecoin as well also work with the UTXO model, but it's very, very complicated because I think people often overlook the absoluteness of handing over a UTXO. Once that UTXO is handed over, you cannot do something else without that UTXO, which is why you can't buy two different things with one UTXO, because that transaction needs to settle, and then that transaction needs to settle once the change has been given from that UTXO. So let me know if there's any questions on that
that's
one.
the UTXO. What's the other one, the PB?
So partially signed transaction is how marketplaces work right now. So this essentially says, I want to sell my ordinal. I want to set up for $100. So here's one half of the transaction. And then I can come through and say, oh, hey, I see this partially signed transaction. I'm going to sign the other half of it and be that counterparty.
Okay. So yeah, so I think to come back and maybe summarize from my layman's kind of viewpoint, if you think about it from a cash perspective, when you're handing out a $10, $20, $100 note, and how the change comes back is a good mental model to start to understand the UTXO. If you have to go below that, you may want more of a technical understanding and stop using the analogy. And then I think the partial transaction one, it's like the beginning of a contract, like any contract, right? I partially signed this. If you want to come in and be part of this contract, you can sign it as well, and we can have a deal.
Yeah, exactly.
Okay. So the importance of that is also, I think the opportunity. That's probably something that so many people have steered away from. When I was talking to Matt about this, it was this idea that like, why would someone go to Bitcoin to work on such a thorny problem? I mean, Vitalik, who I think many would argue is just one of the luminaries in the space, and he created a whole nother chain, right? He created a whole nother idea with a virtual machine to say, because I can't do what I want to do on Bitcoin. Now, things have evolved since then, right? Didn't have Taproot at the time. Didn't have some of the other innovations that have happened to Bitcoin. Didn't have ordinal theory that changes everything. So it's interesting. Walk me through a little bit. You talked about the problems that you're solving at a high level. We talked about UTXOs. What are some of the trade-offs inherent in the design that you've made, having to work with Arch, having to work with this cash-based accounting model, this UTXO model for Saturn? What are some of the trade-offs you guys have made, maybe in reflection to what you'd have with a centralized exchange, or maybe, with what you're seeing existing already on Ethereum and Solana? That's two examples.
Yeah, good question. So I think that's trade-offs. So just one quick thing, just while it's fresh in my mind, because this is a conversation I had with CB Spears, and I think it's a really interesting design question that most teams building on Bitcoin have at the moment, which is every product decision has two questions to it, or is two-pronged, being that, do we want to try to educate users on how Bitcoin works, or do we try to obfuscate all of the warts of Bitcoin? And this goes back into this UTXO, PSBTs, splitting UTXOs, mempool fees, all things like that. And a lot of marketplaces at the moment have taken the approach of, let's try to educate users, whereas we've always taken the approach of, let's obfuscate these challenges away from users. So let's make this really simple to use and easy to pick up.
You want to be Apple and not Linux.
Yeah, exactly. Yeah, it's a good analogy. But yeah, that's kind of like been our philosophy towards building this. And like the trade-off for Arch is that we know that this is going to be the gold standard for user experience. But as a result of that, we've had to build on something that is being built on for the first time. There's a lot of problems that we need to find. And just from like a strategic point of view, this is also a little bit annoying because like let's say a direct competitor wants to come across. We've already solved all of the hard problems, and a lot of them are presented in our technical white paper. So we're giving other teams a bit of a layup into the space. So that's like a big trade-off there. Another trade-off is the time that we've spent building this product. So the months leading up to Testnet, the Testnet months, and then Mainnet is all time that we're not spent developing our previous product, not advancing our previous product, potentially losing users and losing narrative on a larger bet that this user experience and development of Bitcoin is important enough to make that trade-off. And then I think you look at trade-offs in terms of like, I mean, my opinion on Ethereum probably is better saved to not go on this podcast because, yeah, just...
Fair enough.
Yeah. With things like Solana, I think like a lot of the innovation there at its most foundational level has kind of happened. And I think there's some brilliant teams there. So I think like from a problem solving perspective, I don't think there's that many hard problems to solve in Solana right now. I think Solana also has if Bitcoin fails as a network, if miners don't become incentivized, or if miners are profitable, that presents a big security risk to the whole network. And if the whole premise of Bitcoin is invalidated, that's a big issue for the whole industry. So that I see that as a more glaring problem with more foundational work that needs to be done so we can have a larger impact there. Whereas if you go to Solana, you're going to be competing against 100 of brilliant cracked teams with major funding, or you can come to Bitcoin and be the only team working on this specific problem that's got a massive amount of demand and longevity to it.
So the trade-offs there being where to put your resources to be able to actually achieve this vision that you guys have, which is around this DEX versus your previous product. And then really from there, it's, ecosystem where you guys have chosen to be, which is more the Bitcoin versus some of the other L1s. I mean, we talk about Ethereum and Solana, but there are other ones as well that people are funded on and could be working on as well, right?
Yeah.
But I think the amount of liquidity, this comes back to this recurring theme about what is the opportunity to solve this on Bitcoin. It just feels massive that if you could have custodial type or non-custodial type of arrangements that allow you to do other things with Bitcoin, people, maybe not the previous breed of people that come into Bitcoin and said, this is it. This is, we have to buy it and hodl. But now you have people saying, no, I like it. I like all its principles, but I want to be able to do things with it. They're more open to it.
It's push and pull, right?
Yeah.
Because you've got the push element of, if no one solves ecosystem activity, we're in a critically bad issue. And it's pull as in, there's $1.3 trillion of idle capital that isn't moving about the space. If you can make that money move about the space, that will eclipse all of the volume seen on all of the other chains, potentially combined. So there's one very big issue and there's one very big opportunity.
So I have I'm not even sure I'd call it a hypothesis, but I feel like at some point if this problem gets solved, and I'm very optimistic from a technology perspective, innovation perspective, And I know there's other challenges like getting the flywheel going of people to actually join the network in that way, use the network in that way. But I'm excited about what's happening. But I have this feeling like what could be offered directly natively on Bitcoin could compete at some point with just holding an ETF of it, right? Like the cost of just holding an ETF being versus owning the native asset and being able to use it for recurring revenue for lending and loans is going to be substantial. Do you have a perspective on that?
I had a bit of a jumping conversation around like, if we succeed so much that Bitcoin becomes a yield bearing asset, does it then reverse its position of being a commodity, which could be difficult? So yeah, it's I don't know. Again, it's really difficult to understand the implications of it. And you gave me like a bit of a story back to like 7-8 months ago or something. And we were talking about like, what's like the end games of Bitcoin? Like, can we have Bitcoin to the point where it's as performant as any other layer one? And like, obviously all things are possible. And there's some like really interesting technologies. Like I think specifically on like the wallet point of view. Now, wallet's a weird custodian of sorts. But again, if we're to have a network of wallets, let's just use Xverse, for example. If you had a marketplace that you could only interact with other Xverse wallets, there's so many other parameters in utilities that you get as a benefit of doing that allow for some really interesting applications. Before Arch, like this was the closest theory we had to like, how can you kind of get smart contract-like transactions to happen? You can do it with a big network of the same wallet that has certain checks in place and stuff, parameters and such. So I think like, these are the kind of abstract solves that I think is where we're going to cover a lot of ground. How it looks like, I just don't know. I think, Bitcoin will change as an asset. The things that you can do with Bitcoin will also change as an asset. I think we will see performance upgrades of sorts. How far we can push this thing, I don't know. But when you've got ecosystem of some of the most intelligent, highly motivated people you can find in crypto, I think you can do some pretty special things.
Well, we just saw Elon Musk land a rocket with chopsticks, so
right.
I'm confident we can solve these problems. Yeah, that's right. But he talks about that inspiration. It does matter. It's not just nice to have, right?
For sure. I think that's the other cool thing about building on Bitcoin is it feels really important. Like it's not like, oh, hey, there's an opportunity here. It's like, wow, like you could do this for Bitcoin. Like there's a different element of gravity there that I think it just feels a bit special to like contribute to.
So to sum it up, we don't know exactly where this goes. There's an existential question of moving it into a yield-bearing type of asset and some of these other features actually erode some of the other the narrative that it's like gold, or does it really make gold 2.0 say, hey, gold plus these other things, the digital aspects that you can't get otherwise? It's Ben Lilly from Espresso likes to say Bitcoin could be the pristine collateral. And which I like as a mental model, sort of this new, maybe it's digital, pristine collateral. But what's that?
Just one interesting spanner in the works, which I was think like a fun thought experiment for a lot of people that are like, oh, Bitcoin is the way that it is, and it's always going to be that way. Is that like the whole issue of quantum computing, I think, is a large issue. I think like some of the timelines that some of these developers are putting out is kind of crazy. Like if you can actually have constant quantum computing with like a 5 to 6 year time horizon, and every seed phrase on the planet is cracked instantly, we are in a position where you have no choice but to hard fork Bitcoin. Now that is either a crisis or that's an opportunity. I think like there's so many just huge like black swan, white swan events that can happen between now and 50 years time. But I think like, the only way we make progress again is just like one step at a time.
We'll bring it back to one step at a time and not the black swan. So looking specifically at the design though, for what you guys have done on Saturn, I just want to see, like, again, from a design trade-off perspective, oftentimes when people talk about any kind of market making type of activity or some of these tools like AMMs, there's slippage considerations, there's time to settlement, there's finality. There's a whole host of things that you're looking at to be the most performant, I would say, marketplace or market instrument or tool. Are there things that you guys you've already talked about the idea of trying to be abstract, take some of the complexity away from the user, be more of an Apple, not Linux? Are there other types of considerations or trade-offs that you've thought long and hard about that you've had to make in terms of maybe more specific to the domain of being more of a trading tool?
Can you rephrase the question?
Yeah, so I guess, when I think about the limitations of Bitcoin, the fact that it's mined every 10 minutes, and so there's a time lock there for settlement, right? And then you have only so many transactions that can go in during that period, and then you're trying to create a highly performant with Saturn. You're trying to create a very highly performant DEX, right? I'm curious if there's sort of things that you've said, hey, we're not going to we're going to have more slippage on pricing, or we're going to have longer settlement times for your transactions. And that's part of the network. We're not going to give that up because that's the way Bitcoin operates. And that's part of going to be our design, rather than trying to do a workaround that would maybe be a little bit more acceptable from a user perspective.
So I do remember your question. I'm sure you can splice it about. But yeah, see, Saturn is not highly performant, and we've never kind of intended it to be highly performant. I think what Saturn benefits from is programmability. And I know that sounds really basic, but there's not a single other offering of non-custodial liquidity pools on Bitcoin. I think that alone is such a large value proposition. Not to say that performance isn't a consideration for us longer term, but I think for now, let's bring a highly programmable application, a highly programmable DeFi application to Bitcoin base layer users for the first time. By nature, by design, you're going to have better trades, cheaper trades, faster trades, just as a result of the way it's been built and the way that, because it can benefit from smart contracts. But yeah, you're still dealing with Bitcoin. It's still going to be longer transactions. There's still going to be more expensive transactions. At times of high network activity, that's also going to spike. But again, this will be the best way, the cheapest way, the most profitable way of trading tokens on the base layer of Bitcoin.
Okay, fair enough. So let's use that as a point to actually get into what a user could actually experience, because you talked about this being programmable DeFi. We know we have the Arch network as an element. We have Saturn. You have the wallet. Walk us through at a high level, what are the components, what a user, an individual retail user might experience, maybe if it's more of a larger base that's looking to do larger investing. What does that experience look like based on the elements that are part of the overall solution?
So the two main pillars of Saturn initially are just liquidity pools and the AMM swap. So okay. Liquidity pools, so anyone can make a pool, and that'll be a Rune token to Bitcoin. And that essentially is just a pool of token that people using the swap will be able to trade in and out of. So let's say you want to put up $100 worth of DOG and $100 worth of Bitcoin. The people will be trading with your tokens. Now, every time someone makes you trade with your tokens, you'll make some fees as a result of that. Now, in a sideways choppy market, that's the most profitable thing that you can be doing. Liquidity provision is a widely adopted strategy for kind of profit-seeking individuals across multiple ecosystems. Now, the swap is interesting. So obviously, you can use this on the Saturn swap. This is where you're going to get the best rates. But I think what's going to be interesting is kind of where this swap ends up. So I've got a good hunch that this is going to be the native in-wallet swap for most providers, being that it's incredibly easy to do. And it's a very inoffensive thing from Bitcoin. So again, a really specific and important caveat of Arch is that takers can interact without needing to take on any trust assumptions. So you can exchange your Bitcoin for a Rune within your AMM, and you're going to know 100% exactly that swap is going to go through, and you don't need to trust anyone. And that's such a powerful instrument when thinking about like an AMM swap. So again, two products, liquidity provision and the swap. That swap could exist within Saturn, but it could also exist in any other platform that decides to integrate our swap.
Okay, so the user may not even know that they're using Saturn. Let's say if they came into Xverse as a wallet, and it'd be using that on the back end?
Yeah, so let's say hypothetically Xverse was to integrate our LPs or our AMM as their in-wallet swap. So on Phantom, I believe on Phantom and Solana, and I'm not sure what the case is with MetaMask, but they aggregate the existing LPs or existing AMMs to give you the best rate. So when you're trading a swap, or let's say Jupiter and Solana, for example, that swap that you use, you don't know which LP you've just dived into or which AMM you've used to. They're giving you the best rate there. But being that we'll be the only non-custodial LP and AMM on the base layer of Bitcoin, if you're using a swap on Bitcoin that benefits from that, it's going to be Saturn initially. I think within 4 or 5 months, we will see other players start to come in as well. But then, once you start using swaps within wallets, it's going to be unlikely that that you'll be interacting with Saturn at all.
Right. So the developer community knows that they're working with Saturn. So do you see that as part of like your future vision is that Saturn is really just this middle ground layer? Let's say end user retail doesn't even know that they're using it, but it's kind of proliferated across the Bitcoin ecosystem.
I mean, that would be awesome. That'd be great. I'd love that. Yeah. I guess I think like for the right people that want to make money from providing LPs, that's a really useful and great product. That's a great way to earn fees, just full stop. The swap side of things, if I want to buy a Rune token, I'm going to use the Saturn swap. It's where I know I can get the exact amount of tokens I want. I'm going to get my order go through immediately, and I know I'm going to be getting the best rates for that. But then, if people want to take that product and integrate it into their own products, that'd be awesome. But I also think this is where like thriving ecosystems come from, is where multiple LPs start to come up and multiple AMMs come up. And that way it becomes a really competitive and healthy ecosystem. You get like a real free market going on. That competitiveness also breeds some really cool innovation. Obviously, there's like the roadmap for instance, concentrated liquidity pools, dynamic liquidity pools, and things like that. Some like really cool innovations that you're seeing going on in Solana at the minute. I think those will eventually come to Bitcoin, but again, like this is the first non-custodial LP on the base layer of Bitcoin. So great.
Okay. So the AMM liquidity pools, those are sort of the primary innovations that you're talking about now. Walk us through what you're expecting from a timeline, where you are in this from a testnet perspective, when you plan on going live.
We've been done for a little while now. I think we've been ready for like 2 weeks. I think we'll be going live on Testnet, fingers crossed, next week. I'm not sure when this podcast will be airing, but we'll kind of see how we go. There's always last minute marketing things, and people want this thing set up or this announcement ready before this goes live and things like that. And then it just comes down to testnet. So testnet is going to be a really fun time where people are going to try to break Saturn. We're going to be probably doing some bug fixing. That will go on for a number of weeks, and then once we run out of bugs to fix and everything's audited and ready to go, we'll be hitting mainnet. But I think one of the things to consider when using the testnet product is this is the exact same product that you'll be using on mainnet. But the only reason it's not on mainnet is we just need to test everything's working, because this is money that we're dealing with.
And I know that Arch, when I spoke to Matt, it was really like December seems like full throttle. We've tested the fire, we've tested everything, we've kicked the tires. We feel that's a likely time. I'm not holding him to that, but I think that was kind of a plan, and perhaps even earlier than that. In December of this year, where do you expect Saturn to be with these products? Are these, in your mind, they're live?
Yeah, we'll be live day one of. So we'll be live day one of their testnet, and we'll be live day one of their mainnet. Actually, have a call with my developers this afternoon to roadmap how are we going to extend this product because we do anticipate that we'll be audited and ready to go with Saturn in quite a timely manner for testnet. So we're going to start building out like the next iterations and extensions of our products. So hopefully by mainnet, Saturn will be a little bit more advanced than what it is right now. We'll use this kind of downtime as productive time to continue to try to make a really useful product.
Okay. Well, it's exciting times. I know we've got just a few more minutes left here. I probably could have asked this earlier. There's always so much to cover here, but what is your view on the success of Ruins and RareSats and the success that happens once you guys are successful? Because there's so much discussion. I had an interesting conversation with Isabel Fox and Duke about it. I guess it was over a month ago now, about how everyone was super excited. Like no one was into sort of the original ordinals, and then they kind of blew up, and then Ruins came out, and they were like, oh, I'm going to catch that. It's going to catch fire. And then it felt like it kind of landed. It wasn't as successful as people were preparing or expecting it to be. And then you talk about some of the challenges from a UX perspective and bringing liquidity into this ecosystem. It sounds like you're trying to solve, at least at the starting stage, one of the largest ones. This could be a potentially, I would think, a pretty significant boost to that ecosystem, both Ruins and RareSats. How do you think about that?
I mean, like So, RareSats broke my heart a little bit. I was convinced that RareSats were going to be like the original shitcoins on Bitcoin. I thought PSBT was just such a great narrative. But people again start to treat them more as like non-fungibles and as tokens. And rightly so. I think like Bitcoin as it is right now is most suited for trading non-fungibles, for things like ordinals. That's why ordinals has been a great success, because you don't need any advanced functionality. You don't need high-speed transactions unless you're getting front-run in the mempool and things like that, which is a big issue. But yeah, ordinals has been a massive success because we don't need these performance functions. BRC20s were incredibly complicated, really friction-heavy, and also at times just simply broke Bitcoin, or didn't break Bitcoin, but made it so expensive that people just couldn't use it. I remember seeing like 700 sats per VD and stuff. Like, it got crazy. Runes, yeah, okay, it wasn't as impactful on the network, but it was still very complicated. Like, if I've come from trading on ETH, I've come from trading on Solana, I don't know what UTXO is, and I don't understand this user interface. Why have I got to buy lots of this token? Like, how do I sell this? Like, why would you mean I can't just sell this instantly? Like, there's all these weird things, and that has a trickle-on effect. So obviously, I mentioned earlier, like institutions, and we speak to a lot of them, they see the opportunity with tokens on Bitcoin, but what they don't see is a mature enough ecosystem. And I think like I love Casey to bits. I think he's a mad genius of sorts. I think he doesn't even, I think some of his genius is almost so good it's accidental. Like, I think what he did with Ordinals was just so brilliant. And it's such a shame that we've had such limited use case of it, because I think there was so much further that we could have gone down that rabbit hole, but it's another conversation. But yeah, Casey made Runes not with the intention of making this really sophisticated, thriving DeFi ecosystem on Bitcoin. He just wanted to be like, hey, here's a cool way of doing tokens on Bitcoin. Now, for better or worse, we went and told the world that this was now the new multi-billion-dollar industry. This is the future of finance, this, that, and the other thing. And people came to Bitcoin and bought these tokens and were just like, what the hell am I doing? Right? This is so confusing. This is so slow. This is so painful, aggravating. And yeah, I think it's kind of the issue has never been Runes. The issue has never been RareSats. The issue has never been BRC20. The issue is how you can use these assets. The programs that we have don't work with these assets. Like, the issue isn't, and this is another thing that really frustrates me, another token standard isn't going to solve this. Like, we are seeing more and more token standards being built. Until we see programmability, and we see better applications that make trading these things legitimately useful. Like, another thing that's frustrating about Bitcoin is we see a lot of virtue signaling going on, like, oh, well, it doesn't matter about user experience because this is Bitcoin. It's like, well, yeah, that might apply to you, but that's not going to apply to the majority of people. So yeah, like my argument is that there's never been an issue with the assets, it's always been an issue with the applications and how we can trade these assets.
And that is what you guys are going to solve. So I'm confident we're going to have some kind of resolution there. We got last questions here. What can you share about the future after this? This is already going live. You talked about AMM, liquidity pools, atomic swaps, being able to provide all that. Is there anything else you can give us a peek behind the curtain of what you guys are planning going forward? What you see is on your roadmap? That's just too much. Reveal.
I just don't want to let the listeners down and say something that will fall through. I mean, all I say is that we're in a number of conversations with some incredibly impactful people that really want to take Bitcoin seriously. And we're kind of like the proving ground for that. If we can prove that, hey, you can make a really useful application on Bitcoin, that opens the doors to some really interesting partners. I think, just like at its most basic level, like we're yet to see like a real big stablecoin player coming in. If we were to see a USDC, a Circle, actually take Bitcoin seriously and make a Circle Rune, which I know is difficult due to the existing functionality of the assets. Funny to there's no issues with the assets, but hey ho. I think, yeah, once we can see a legitimately safe stablecoin that people are happy putting serious capital in, I think you start to see a real increase in velocity of Bitcoin ecosystem activity. So I can't get into the details of like what specifically is coming next, but I think like there should be some assumptions of the types of things that can be happening on Bitcoin as a result of this. I mean, you talk about real world asset DeFi, for example. I think like the most valuable assets on the planet are only going to be trusted on the most secure, most decentralized network in existence. It's Bitcoin. There's a whole industry that's waiting to come to Bitcoin, but before it can do that, we need to demonstrate that, hey, the applications are possible. So yeah, there's some really, really cool stuff in the work, but again, like, that's one step at a time.
One step at a time. Hex, where can listeners find you? Where's the best place to interact and learn more about what you guys are doing?
Yeah, so you can find me on Twitter, so it's just LH_EXE, or you can follow the Saturn account, Saturn_BTC. I'm always online, unfortunately, so you can always shoot me a message. Any technical questions, any strategy questions, any criticisms, we're always open to hearing it. Everyone needs to jump onto a call, be my guest. If you're a team that's working alongside this, you've got questions about Arch, you've got questions about Saturn, you want to work with our AMM, anything, our door's always open. Like I said earlier, like, it takes a lot of us to do a really good job for this to have a chance. So yeah, please do reach out.
Hex, it was an absolute pleasure. Definitely, I think people will be reaching out, learning more about what you guys are doing. But I look forward to bringing you back, maybe other people, the team, just seeing how this progresses. And we'll hold you to bringing the stable coin. I know you didn't promise that, but now since you mentioned it, you're now the person. That target's on your back, buddy.
Oh, God.
All
right,
I
appreciate the time. Thank you so much.
Cheers.